We're discussing US President Donald Trump. He marks a month into presidency, and definitely we will be continuing this conversation on the social media as we seek to understand or to get your views on what exactly you think about Trump's presidency 1 month on. Back into Africa, Rwanda's leading telecommunication provider, MTN Rwanda, in partnership with Commercial Bank of Africa, has launched a savings and loans product dubbed Mokash that will enable registered MTN mobile money customers to save and earn interest to take loans on a short-term basis using their phones. KTN's resident reporter in Rwanda, Eugene Nangwe, spoke to CBA's Group Managing Director, Isaac Awondo, earlier on this latest development.
This is a deal that has actually taken a couple of years to seal. Yeah. Could you just take us through the process and what it really means to those who own mobile phones and are subscribers of MTN?
Okay. The deal is taken, we first had conversation with MTN just over 2 years ago. And the agreement we came to was that they would give us the opportunity in three markets. That's Uganda, Rwanda, and Ivory Coast. And the real reason they came to us was the fact that we had a proven track record of working with telcos to basically commercialize mobile payment solutions into formal banking services. Having done that in Kenya, where we were the first bank in the world to basically launch a mobile loans and savings solution in the market. And then subsequent to that, we then did the same in Tanzania. I think beyond being an MTN customer who is vetted and accesses services from MTN, you don't really need anything else. All you need to be is above 18 years old and have a need for full financial services, because recall what we are actually setting up is a full banking service which is delivered through a mobile payment channel. Yes. So through that you are able to save, and also you are able to access credit if you have a cash flow need.
Perfect.
Yes.
The fact that you can be able to do this just by the use of your mobile phone, where does this leave the banks as institutions, as buildings, as facilities? Where does this leave the banking institutions?
I think I see this as an evolution of banking. And I think one needs to go back to history to look at how banking has evolved. Many years ago, and now probably 20 years ago now, if you went to a bank, they basically had very fixed working hours. Typically, banking services would start at 9 and end at 2 to 3 o'clock. And the next innovation which came in was basically as shopping malls opened up, banks extended their opening hours. The next evolution was basically internet banking, using the internet to access banking services 24/7. So I see the use of mobile phones really as an enhancement of a channel which makes things much more convenient, because it's very personal tool, and you have a lot of information on the mobile phone, which basically would allow you to undertake any transaction from a financial services point of view at your convenience, so that you don't need to then focus on banking hours. Now, banking typically from a bricks and mortars perspective will not necessarily die, but the way it is operated will possibly change. That is my prediction.
Perfect.
Yes.
You see, what has come out clearly is that most people who we talk to concerning issues of access to finance have always said the problem is not availability of that loan, but the process through which they have to go through to access it. Do they need to celebrate because there's this one now, or does it still leave room for more channels to go through before you get this loan from this service?
Okay, I think that again, take you back to the process we've designed. We've designed a process which allows us to pre-credit score everybody who opens an account with us, a savings account with us. What does that mean? It essentially means that out of your mobile phone and mobile money activities, we are able to determine how much credit we can actually allocate to you. Post that, once we have allocated you an initial credit limit, you basically then have the ability to be able to create a better history for yourself through the way you interact with the savings, with the loans, from a repayment track record perspective. So typically what we'd expect is if you are saving more and you are borrowing to meet whatever needs you have on a short-term basis and you repay your loan, your limit will basically increase as a principle. So that's what we are looking to do, and we have achieved that for all the markets we've operated in. I think in addition to that, one of the things we sought to achieve was to simplify the process of application so that the application is handled through the mobile phone, the application is assessed and fulfilled through the mobile phone, and the money is then transferred into your mobile money account, so that you are able to actually access the money you have borrowed. Now, our aim was to make sure that that decision-making process takes no more than 20 seconds.
In 20 seconds?
In 20 seconds. You should be able, and then eliminate a lot of the paperwork, because we've pre-scored you. We know who you are. We have done a KYC on you. We have set a credit limit for you. And all we are doing is basically giving you a short-term and secured credit on the basis of a credit history you have. Yes.
Perfect.
Yeah.
Before I let you go,
Yeah.
Where do you see the future of this?
Okay.
Does it end here? Do you plan to build it even further?
Yeah.
And how do you deal also with the issue of security? Because someone can borrow, get the money, the next day they throw away the SIM card and the phone. How do you deal with it?
And I think that we believe in the fact that people are essentially honest. And I think that as banks, we have wanted our customers to trust us with their money, and we don't trust them with our money. And I think that's really the fundamental issue is around trust. Now, the experience is obviously that there will be people who might want to game the system. The risk, obviously, you run into is that if you default from paying your loan, even if it is 100 Rwanda francs, the risk is that we will report you to the Credit Reference Bureau. And that essentially means for 100 francs, you are never going to be able to get credit again for a long time. And so if you balance the risk of that and the convenience which is being presented to you, that you have a cash flow shortfall and you need to meet it, and you don't have to fill a form, which has to go through an assessment, which basically then goes through an approval process, which then goes through a decision, which could easily take a week. Easily take a week. By the time your problem is being solved, you are probably onto something different. For the convenience which is being offered, I think I would really be keen to understand why anybody would actually not want to honor their obligation, because I think it goes to the fundamental of trust. And our experience in Kenya, Tanzania, and Uganda has been very positive so far in terms of people coming in, meeting their financing needs, saving, and when they borrow and their financing needs have been met, they basically pay back. I think what that does, it builds overall confidence in the system and allows more people to basically gain access. And I think that is really what we are trying to drive at. So we see the future of this as again, an evolution from what we are seeing today as basic individual or person-based savings and credit, to something which can actually evolve to support micro SMEs, for example, which have similar problems. Because through the payment system, we basically we are able to collect enough information in terms of their cash handling behavior and how we can then drive them towards an ability to access credit. But also then move them away from handling cash into using the mobile services for transactions. And this is very aligned